Recurring versus one-off remuneration. What's the difference? Recurring remuneration is a term used by the Office of the Tax Commissioner to identify those payments included in the calculation which determines a person's annualized remuneration. These payments are normally repeated forms of compensation paid to an employee, deemed employee, or self-employed person. Recurring remuneration also refers to payments which have been deemed by the Office of the Tax Commissioner to be a part of normal compensation, even if they are not paid at regular intervals. Examples of payments treated as recurring remuneration are salaries and wages, including the employee contribution to benefits such as health, life, and pension schemes, overtime, retail commissions, directors' fees paid more than once a year, housing allowances, parking allowances, etc. This annualized rate of pay is then taxed according to the progressive tax bands. For example, a person who earns $1,000 per week in salary plus benefits plus a further $1,000 in commissions would have an annualized rate of pay of $104,000. This is based on the $1,000 salary plus $1,000 commission, giving us $2,000 per week, which is then multiplied by 52 weeks. Since this person has a rate of pay of $104,000 per year, we can see that they would be taxed over bands 1, 2, and 3, which are currently 1.5% on the amount earned up to $48,000, 9% on the amount earned between $48,000 and $1 up to $96,000, and 9% on the amount of remuneration between $96,000 and $1 to $235,000 per fiscal year. It is important to remember that the three bands would be used to first calculate the annual tax, and then this number is divided by the number of pay periods in order to determine the amount of tax to be withheld at each weekly pay period. For further clarity on calculating the tax to be withheld at each pay period, see Part 3, Illustration of a Payroll Tax Calculation.
On the other hand, one-off remuneration payments are not considered to be part of normal compensation and are therefore not included in the annualized rate of pay calculation. Examples of one-off remuneration payments are severance payments, bonuses, real estate commissions, share vesting proceeds, directors' fees paid annually, personal travel allowances, dividend payments, etc. We can see that if one-off remuneration payments, such as bonuses, were to be included in the annualized calculation, this would put employees in much higher tax brackets than they should be in. Let's go back to the example of a person who gets a normal salary and benefits package of $1,000 per week, and also receives a one-off bonus of $1,000. If we were to annualize his normal salary of $1,000 per week by 52 weeks, this would give us $52,000. This $52,000 is then taxed according to the progressive tax bands and would be taxed over Band 1 and Band 2. Remember, Band 1 is anything earned between $0 and $48,000, and Band 2 is the next portion of a person's salary, which is between $48,001 to $96,000. However, if we were to add the bonus to determine annualized remuneration, then this would put the employee in a higher bracket. In that case, we would be adding the $1,000 salary plus the $1,000 bonus, giving us $2,000. This $2,000 would be multiplied by 52 weeks, giving a total estimated annualized remuneration of $104,000. This would result in a tax across Band 1, 2, and 3. Since Band 3 is that portion of a person's salary which is between $96,001 to $235,000. This would not be fair on a person who normally receives an annual salary of $52,000 and receives the occasional bonus. In order to ensure fairness in the application of tax, one-off payments are not included in the annualized remuneration calculation. Instead, they are taxed in the next available band up to the maximum allowed for the band. For instance, in the example above, a person whose annualized remuneration is $52,000 would have his first $48,000 in Band 1 and the next $4,000 of his salary multiplied by the 9% tax applicable to Band 2. Since Band 2 is a tax on that portion or remuneration earned between $48,001 and $96,000, we can see that the additional $1,000 bonus will be taxed in Band 2 since adding the $1,000 keeps us within the allowable remuneration for this band. As a result, the payroll tax due for one-off payments is calculated at the marginal rate of tax for the excess over the annualized recurring payments. For a review of determining annualized remuneration and calculating total annual tax, return to Part 3, Illustration of a Payroll Tax Calculation.